People break the rules, get lucky, make a winning trade, and they think they figured it out. They believe, okay, I don't need rules, I have my gut feeling. And eventually this is always going to come back. You read biographies like the one from Jesse Livermore, you will see he went broke many times, he made fortunes many times. But this is probably not a lifestyle that many traders would like to have. You want to get to a place where you make constant money, months after months, without those crazy fluctuations. You have to make sure that, you really get to a place where you analyze your trades, not only on the outcome, but also on did I respect my rules, yes or no.
Welcome back everyone to I'm sitting down with Rolf from Tradeciety. It's been a long time I want to interview you in person. I know we did something in Frankfurt a while back. When I was there for a couple of days, we did a YouTube live or something, which we'll link somewhere in the corner. But good to have you here in person, of course, in Chiang Mai, in your house. And I want to talk about trading, some tips you can share with people, of course. Tell people first who you are and kind of what you do these days in terms of trading.
Yeah, sure. So welcome back. Always good to see you, wherever we are. And yes, I've been trading actively for around 15 years. I'm now in my late 30s, and when I was 16, 17, that was just around the dot-com boom, and that's where I had my first introduction to stocks and stock trading. And then that's where I caught the bug. And eventually I switched over to Forex trading because it was a little bit more accessible, especially for new traders, undercapitalized traders. And then, I studied finance to pursue the interest and to stay close to trading. And so for the last 15 years I've been trading. For the last 10 years I'm only trading and nothing else.
That's pretty good. You also run two businesses. So Tradeciety is one of them where you teach people how to trade. You gave your knowledge for pretty much for free out there on YouTube. And people can check that out, and they probably know you from there already. So Etienne, you run a trading journal software, which I find is pretty good. So probably one of the best softwares out there for journaling. So that's pretty cool. I want to go back in time. Tell people how did you start trading? I know you mentioned the dot-com bubble. That's when you got involved in trading for the first time. But how did that go? How was the learning curve to learn to trade?
Since I was 15, I was always doing stuff online to try to make some money. And that's where I really started to know I never would like to work in a general office setting or employer relationship. So that's why I looked always for alternatives, stumbled across trading. That's how I really got interested in it. And then I moved pretty much through everything, swing trading, day trading, algo trading, everything until I settled for somewhere between day trading and swing trading. Started Etienne along the way because I saw this need to start recording your trades, analyzing your trades to get better eventually, find performance leaks. That's it for it, just continue to learn over time.
Pretty cool. Did you ever have to have a job where you were trading at the same time and had a job at the same time, or did you only go with trading in the first place?
Yeah, so I was really serious about trading when I was in university. And so I had university, I was working at the site at a 20-hour per week job, and I was trading at the same time. So I was always trying to juggle it, and that's really why I started to appreciate a little bit more higher time frames, because the lower time frames just take too much time up. But if you're on the higher time frames, you can really nicely arrange it with everything. And it does take a lot of time management in the beginning, but once you have it going, it's not too bad. And these days, I see it as well with the traders that I work with, that if they have the busy day job and a life, then the higher time frames are often a good starting place, at least, to have a way to juggle all the priorities.
So how did you make the transition from university and then a job to trading full-time? Did it happen straight away when you finished university, or was it a little bit later that you made that jump?
I was working at the site when I was in uni, and I was able to save a little bit. I was trading, and I was putting away some money. But obviously I'm from Germany, and living there is really expensive. So you cannot just, with the savings you get as a university student, fund your account and then expect to live comfortably off of that. So what I did is I took a little bit of a risk. I sold everything that I had and owned in Germany. And I was looking for a place where the living expenses were really, really cheap. And then I stumbled across Southeast Asia, and I bought a one-way ticket to Vietnam and then made my way around there. The living expenses are obviously just a fraction of what you pay in Europe, and there I was able to trade, to have a lot of free time to put into my trading and eventually build my trading account. I was in my mid to late 20s, mid-20s I would say, so I didn't have the family and all the obligations, so I think at that time that was the right call, and it allowed me to to not have any other obligations besides trading. I could focus all my energy on trading.
That's interesting because I had like the same story, pretty much the same thing. So I went to university, then I finished university, went to trading full time after, and actually flew to Shanghai. That was my very first trip in Shanghai. I spent a bunch of time in China, where it was also like cheap, not like Vietnam, but close to it. Yeah. And then I kind of started to travel and stuff, and that's kind of how I made trading work in the first place. So very interesting to hear, like how you did it.
Yeah, I think it was a huge step, but I think if you're in your mid to early 20s, I think that's the time where you can really take some risk. Yeah. It's only you, and you don't have to take care of other people. So I think it's if you really are serious about it, you can put some money aside, then you can approach trading the right way without over leveraging. I think that's a really good approach if you're interested in traveling as well.
A couple of times I didn't have any money anymore when I was traveling, so I had to go back to Canada for like a few months, like save a bit of money there with trading, then go back to travel again, and like do the cycle again until I was able to get more and more capital, more money to trade. Yes. It took a while, but like it was definitely worth it. And then of course it's like a risk. Like these days I'm thinking, oh, should I do this again? Like would I do this again now? Maybe not. But I think back then it was something worth doing, and it paid off quite well. So
yeah, I think it's good when you're young, you're a little bit naive, and you don't know really what you don't know, and you don't know all what could go wrong. And I think that's a good space to be in, that you can take risk. I always thought, okay, I have my education, I can always go back to get a real job and not have to worry about it. So that was not a huge issue.
So how did you go from there? You're traveling in Asia, you're probably going to, I'm pretty sure you went to Thailand back then and different countries around Vietnam too. How did you kind of scale that up to trading? Did you kind of learn some more skills, or did you do something to make this bigger and bigger over time? Or did it just happen like naturally to get a bigger account, trade, make more money and everything over time?
Yeah, I think it was just a natural progression. Always one step at a time. I think that's still what I do. Always try to learn something new, grow a little bit. But always also assess the risk, what could go wrong. And I think if you make always one step after another, then you are likely to end up in a good space. Yeah.
So a lot of people are going to ask, what is Rolf's trading style? I know you teach a lot of strategies on YouTube, like you teach a bunch of ways people can look at the market. Do you trade all that stuff, or do you focus on like a specific aspect, on specific time frames? How do you kind of trade these days?
So on YouTube, I share pretty much anything that I think is interesting. I also like to try to expose people to different stuff. People from all different types of trading are watching the videos. But what I do is, on my own, is very different. The traders that I work with, it's very different. It's very focused on one trading approach, because I think that's the best way to go about it. You really put all your energy and time into it and start to study one without having all the noise around it. And I think over time you learn the most of it. When you have some experience, you can start manipulating the strategy, adjust things. But I think in the beginning, it's really helpful to just focus on really one strategy and try to master it as much as you can.
A lot of people are going to think if you focus on one thing, you're going to miss trades in the market. Like you're going to miss when the market is like trending really fast, or when this happens, that happens. How do you kind of overcome that fear of missing out on the market and some moves happening?
I think it's normal. You're always going to miss something. There's always something going on in the world. And I think you have to come to this place where you're okay with missing it. I think after you've done this for a few years, you will see that there's always going to be the next trade, as cliche as it sounds, but it's really the case. And yeah, there's always something that you could have done differently. I think that's one of the hardest, or the challenges of trading, that once you have the benefit of hindsight, you will always find that your decision could have been much different, and there's something you could have done differently, get in earlier, get in later, exit earlier, exit later. So there's always this imperfection that you have to deal with. I think Moritz talked about it as well, that as a trader, you have to be okay with these imperfections. Nothing you ever do will be perfect, and you just have to get used to it.
Cool. I know people are going to ask, who's Moritz? Moritz is the other guy you work with at Tradeciety in Edgewonk. I've done interviews with him in the past, so we'll leave it link in the corner of the video here or the description below, so you can check it out. And you kind of run the channel together, Tradeciety as well, where we do videos on different topics. That's pretty cool. What are your favorite tools, favorite indicators, favorite entries for trading? Anything kind of particularly like what's your edge in the market?
Yeah. So I trade pretty much price action, I would say, but I do use tools. And over the last 6 to 12 months, I think I've really come to love the pivot points. It's I always try, because I've been trading for so long, and I always come to the place where you do the same stuff, the same routine, and I get kind of bored. So I always try to backtest new things, try out new strategies, go a different way, maybe try algo trading, which I did for 2 years. And yeah, I started playing around with tools and indicators. I stumbled across pivot points, started really seeing the value, how it can benefit a trading strategy, especially if you are a price action trader, which is a little bit more subjective. And having one thing in your strategy that is 100% objective, that there's no question about where the pivot point is, I found it really helpful. I introduced it to some traders of mine as well, and they really liked it as well. So that's the one thing that I've just recently added, yeah, and I really like it.
Interesting. So how do you use these pivot points? Is it like a support resistance area you use in the market, or you look for setting at specific levels on the pivot point, or is it more like a place where you know, like if the market goes down to a certain pivot, it's likely to go down more, likely to pull back up, or how do you use them exactly?
So I only use the central pivot point, not the SNR ones. Mm-hmm. And what I've seen is that they work really well for trend trading. So if you're in a downtrend, very often you see pullbacks back into a pivot as resistance, and you can use that as really nice trend following entries. Also, you will see that in an uptrend, the price generally trades above the central pivot point. And then once you see the transition that the price starts trading around the pivot point and then starts to trade below it, that's often where you see nice trend reversal opportunities. So they help you a lot with trend structure and pullback trading.
And these pivots, you use them on the daily chart, or you use them intraday, or what kind of time frame?
So I use the daily pivot point on any time frame lower than the 4 hour. And I switch to the weekly pivot point on anything above the 4 hour.
Interesting. Now, I tried to make pivot point work in the past, like many years ago.
Yeah.
To me, I didn't understand how to use them too much. I didn't really use them anymore. It was just like a fun experiment to look at, but interesting to see how you use them. That's pretty cool. So the cool thing about this is that they're really objective. You don't have to like think or like look at the market by yourself. No matter how you feel that day, you'll have the same pivot point. So I think that's a really good thing for people.
Yeah, I see a lot of traders in the beginning, they always say that price is king, price is the only thing you need. But when I talk to them, when I see how they work, when I mentor new traders who come and have that attitude, I often see that they kind of, they're either lost when they don't have enough on their charts and they don't have any structure, or they end up with too much on their charts, too many levels, too many support and resistance, and then they get this paralysis by analysis and they can't do anything, they freeze. Because everywhere on the charts there are obstacles and levels and hurdles. But having this one objective thing on your charts where there's no argument about it can be really beneficial, what I've found.
Price action by default can be quite subjective, depending on what you look at. Like some people have like a strategy that they call price action, but then they look at sometimes this, sometimes that, sometimes this part, sometimes this aspect. It's not like a clear-cut thing. How do you make price action like a clear rule-based strategy?
Yeah, I think that's the big issue, because what you can do is you can make any chart say anything that you want. So that's, I think, the dangers if you don't have a very structured approach. If you want to buy, then you can look at a chart and you can make it say buy when you look at specific things. So having this objective tool is helpful, but also what I found really interesting is that once you start really studying indicators, actually looking at the formulas, then you will see, okay, this is actually nothing but price action, but on a different scale. Like the pivot points, they take the high, the low, the close, and then they just give you the average. The moving average as well, it just gives you the average of the last 10 candles. So it's not like it's something completely different. It's not something that's against price action. It's actually quite interesting. The stochastic, for example, analyzes how strong is the market pushing up or down. And once you dig into the formula, you see, okay, that's actually interesting that you can analyze the market that way. What does it mean when the price is closing very high in a range? What does it mean if there's a long wick? And studying indicators really opened my eyes for many things or concepts that you can apply in price action. Because price action, as you said, is so vast. What is it? Candlesticks. A candlestick on a lower time frame is suddenly a pattern, and then you can go on from that as well.
Do you think there's more to price action than just candlesticks and like the patterns you read in books? Like like the head and shoulders, the double top, double bottom, all these things. Is there more to it than these two things, candlestick and patterns, or that's the only thing to price action there is?
Yeah, I think, there's so much to price action, I think. You can start, looking at a price, at a candlestick. If you look at a pin bar on the daily chart, then you go to the 1 hour time frame, you suddenly see that this candlestick on the daily is 24 hours on the 1 hour. So maybe the pin bar looks like a head and shoulders on the 1 hour, which is very common. And then people say, okay, candlesticks don't work, but then you tell them, but a candlestick is just a pattern. And then I don't know where you draw the line, because you can get so much from candlesticks and price action. You can add volume if that's still price action, but I would always encourage people to start deviating a little bit from price action, start adding an indicator to see what are the options. And I've seen very often that traders really enjoy having an indicator on their charts, even though they may think it's lagging or too late. But I think I've often seen that it does help.
Yeah, I totally agree with that. So I trade a mix of price action and indicators in terms of I have only like pretty much always the Bollinger on my charts, and that's the only thing I look at with price action. Yep. So I know you kind of use Bollinger as well, use them in the past, or you've done videos on them. How do you like to use these Bollinger on your charts?
So what I did in the past is I was trading a Bollinger Band spike, I think you call it, and I was having dinner in Singapore 5 years ago with a fund trader, and we were talking about strategies as well. And he said that's the only thing he does all day, in and out. He looks for Bollinger Band spikes, then he trades with a 1-to-1 reward to risk ratio back into the center. And that's all he does, his bread and butter. He looks for a little bit of price action around that. And I found that really interesting. And I keep bringing this up because people always try to make it too complicated. And they try to find some secret strategy or some trick that nobody knows about. But looking at the good traders that I found is they always keep it simple when it comes to chart analysis, but they spend a lot of time on the other concepts like reward to risk ratio, whether it's win rate and position sizing and all of those things.
So when you see a spike, it's like price going outside the Bollinger Band, then coming back within, right?
Yes, correct. Jumping out of the Bollinger Band and then closing back inside it. What I do is I use the 2.5 standard deviations instead of the 2.0 to filter out just more signals and to really have a few left.
Now, I think a big aspect of any strategy in trading is understanding like when it works and when it doesn't work in the market. Like what kind of market environment is it good for and what kind of environment is really bad for. How do you kind of filter that out for your strategy at the moment?
So when you come to Bollinger Bands, for example, it's the 2.5 standard deviations helps a lot because it filters out a lot of noise and you only get really extreme price jumps. Bollinger Bands are using standard deviations. So what this means is that actually it's based on statistics. And if you have the 2.5 standard deviations, I think it's like the 99% confidence interval. So it means that only 1% of all price action can actually trade outside of the Bollinger Bands. So that's a really interesting feature of the Bollinger Bands. And you see, if the price is able to get out quite a lot, that is a very significant signal. You can add confluence factors such as trend analysis, maybe make sure that you are actually in a trend before you take a reversal. Maybe you add a confluence layer such as support and resistance. You see, okay, the Bollinger Band spike has to line up with support and resistance. There are a few options how you can do that.
I think Bollinger Band that way doesn't work well when you're trending, because like when price is always like at the top of the band and always like going up and up and up, then that's where you're gonna get crushed in the market. So that's what I've learned to filter for myself. It's like this time I don't trade too much when it's trending a lot. Or like you said, support and resistance give you a good point where you can see when it's likely to reverse and go back to the mean or to the middle band.
Right. Yeah, I've seen that. That's why I went to the 2.5, because in a trending market you will often see that the market is able to close outside of the Bollinger Band or trade very close outside to the band. And what you see is that with the 2.5 you filter out some of that and you only get the extreme ones. But yeah, you have to make sure that the trending markets, you're not going against them when the market is really strongly trending. But in the end, it's always about also accepting that it doesn't work all the time. So I think that's something that I've seen, especially after working with other traders, is that making sure that you understand that there are trades that just look perfect and they don't work out, and that you're okay with that is helpful for your long-term development. Otherwise, what often happens is that the traders start tweaking stuff, trying to see, okay, this trade didn't work out, what would have made me avoid this losing trade? And then they adjust their strategy, but then you have a lot of problems with that as well.
I guess with your pivot point strategy, that's going to work less well when it's like choppy and going back and forth like a range, and better when it's trending in the market. Yeah,
so I only trade this in a trending market, and to filter that out, I use a 50-period SMA. On the higher time frames, I want to see the market is trending with the SMA, and only then I will look for the pivot points.
Do you look at the slope of the SMA, or do you look at the price being above the SMA, or how do you determine the trend there?
Yeah, so I look at the slope of the moving average and also how long has it been trading on one side of the moving average.
Interesting.
So I look at, okay, are we early on in a trend? Are we late on in a trend? Early on in a trend, I'm more likely to buy continuations. Late in a trend, I will be more cautious and maybe look for signs that the trend is turning.
So a lot of people are gonna say, especially with like sports business areas, like the more it touches, the more it's reliable, the more it's likely to work in the future. Or like with the trend, the more it's trending, the more it's likely to work. I don't think that that's totally true, because the fact that like if a trend has been going on for a long time, it starts to die out, then it's not gonna work in the future. So do you believe the same way with like sports business areas, like when it's working for a long time, it's more likely to break out in the future?
Yeah, I think I agree with you a lot. I've seen the more obvious something is on your charts, the less easy it is to make money with it.
Okay.
So yeah, the big support and resistance levels where everybody's watching it, there's usually a lot of noise around it. Also the big price levels, now Euro US dollar is approaching parity. I guess there will be a lot of noise, Bitcoin at 20,000. So you see a lot of noise, and whenever something seems too good to be true, you have this huge level that always held in the past. And yeah, when something is too good to be true in trading, it usually doesn't work out too easily.
So a lot of people would say, especially with Euro now these days, it's getting to like parity, like 1. So people want to buy at this level, expecting Euro to go back up to like 1.10 or something. Why wouldn't that work?
Well, it might work, but that's not my edge unless there is the specific criteria. I don't care about long term, about fundamentals or anything. I don't care about is the market at parity or not. I just look, are there the signals coming together, yes or no. But if you're using support and resistance, or even the big moving averages that even financial media sometimes talks about when the market is coming near, I found that is not a good place to find your trades.
Yeah, it's interesting how the media talks about like predictions that pretty much never works or rarely works. So you can definitely go against that.
Yeah, especially also when you see whenever Bitcoin is overheating, that's usually a good sign when the media picks it up that you should be a little bit cautious.
I think it's important for people to understand that they also have to create their own trading style. Like you kind of have your own trading style. I'm pretty sure you didn't copy it from like a book or like a website. You just like build it your own over time. Do you recommend people to like in the beginning pick something from a website, or do you recommend them to kind of build their own style to become more proficient at it?
So I spent a lot of time thinking about this lately because I've been working with traders, and I've seen a lot of struggles depending on how you approach it. There are many ways how you can go about it. What I think in the beginning is important that you eliminate noise. You focus on one strategy that seems kind of interesting, and that you give it really a serious try for 3 to 6 months. But you understand that this is not how you have to trade forever, but you really try it out. What I recommend to our traders, for example, they start with a swing trading approach, then they do it for 3 to 6 months, then they switch to a day trading approach, they try that, and then they see, okay, what do I like more, what fits my personality style, and then they can go from there. What I also did is, the traders that have been with us now for a year, they have a pretty good understanding of the strategy, they know what to do, but what I see really where the traders accelerate is once they start adjusting the strategies. So what we did is a lot of back testing. I provide ideas how you can adjust a strategy, what are other tools that you can use, how do you even create a new strategy from scratch. And I think there's a lot of value in that as well. I see a lot of traders, once they take responsibility for and ownership about their strategies, and they get to know, okay, what does it even take to develop a strategy? What are the parts of a strategy? What do I need to cover? How do the timeframes work together? How do concepts, tools, indicators work together? And they try to mold it together and adjust it. That's really where you learn a lot. So in the beginning, I think you need to eliminate the noise and really focus on one thing. But after that, or every few months, you try something new. And I think that you learn a lot, always being curious and always following your leads. But in the beginning, because there's so much noise in trading in the internet, it can get a little bit problematic. So try to focus on one thing and then change over time.
Now, tell me about the patience of that. Following a strategy for like a beginner for 2 to 6 months is going to be tough for a lot of people. Yeah. So you used to follow it like for like a week, maybe a month, and then change something else because it doesn't work. So how do you build that patience to trade something for 6 months as a beginner?
So yes, that's true. A lot of traders will do what you said. They will just change everything pretty much every day. But then you come to a point where you realize, okay, I've not made any progress for the last 3 months, 6 months, a year. So I need to do something differently. And I think that's then where you reach the point how you can approach stuff differently. But I think you need to go through that initial phase. And I think there's nothing wrong as long as you make sure that you have somewhat of a risk management approach, that you're not gambling away all your money. But the longer you do that, the unstructured approach, I think the more dangerous it is, because you are going to adopt negative or bad behavior. Just what I've seen a lot of traders do when they stay too long on demo is that they have really bad risk management habits, and it's very hard to unlearn them, and it takes a lot of time. So you have to get through this initial stage where you don't know anything, and you don't even know what you don't know. So that's kind of a hard spot to be in, but you will come to that place eventually where you get too frustrated to keep going, and then you hopefully look for solutions. But yeah, a lot of traders will go through that initial frustrating phase.
I agree. It's very hard to tell a beginner to just focus on one thing and then trade this one thing, because they're gonna have all these like flashes, all these things outside that they can do that they want to try. But I think you got to go through that frustration first to then start to be patient and disciplined and like follow one thing for a long time.
Yeah, and not even for long. Well, for 3 months may seem long for some traders, but I found it's very helpful if you tell them, okay, for the next 3 months we're gonna do this, and 3 months is a period where you're going to learn a lot if you focus and apply yourself to it, but it's not like you're signing up for your whole life for one thing. So it's a good path in the middle that many traders can accept. And even if you do it only for 6 weeks, you still learn way more than if you jump around from strategy to strategy.
Yeah, for sure. Tell me about this. So you live a long time in Asia. You mentioned in the past Vietnam. I know you lived in Thailand for a while before. Then you moved back to Germany before COVID or something. Then you came back here in Thailand. Now, what do you think is the benefit of trading here compared to in Germany? Is it just like the cost of living that's different? Is it the environment? Is it just a matter of like changing scenes sometimes? Like, why be in Asia to trade?
The move to Asia didn't have anything to do with my trading, since I'm more of a, not long term, but I'm not dedicating myself to a specific session. So it has more to do with lifestyle choices. But when I look at Moritz, for example, he's a day trader, and he says he prefers the Asian time zones. Since when you wake up in the morning, Europe and the US is closed, so you can have your regular start to the day, and then in the early afternoons you have your trading session, and then you can be done before dinner. And that a lot of people find convenient. In Europe, if you trade a European session, you wake up and you pretty much have to just get going. And then you move over into a New York session, and then when you're done with your trading, half of the day is already gone. So some traders can prefer that, but for me it was not a trading choice to come here.
I know a lot of people want to, maybe they live like in Canada, the US or Europe, and they think of moving to Asia to reduce the cost of living to trade. Do you think it's a good thing to do, like a good move to make, to move to Asia just to learn and trade better? Or do you think it's something that they have to master first in their own country, and then maybe later like move here when they do it full time?
Yeah, you should definitely have some experience and skill before you make such a big step. Or you have a really big savings account and you can buy yourself some time. But I would not recommend that you're fine trading now and then next week you are moving to Asia. You should, when I moved to Asia, I was already trading for like 5 or 6 years, and I had a good understanding of what I was going to do and what the odds were. But yeah, there are also, you don't have to come to Asia. There are different parts. You can stay in Europe, what I've seen a lot. People move to Eastern Europe, to South Europe if you want to do trading, but live in a more cheap place. South America is very popular. But yeah, I would not recommend that this is the only way to go, but there are different ways. You can always find ways to scale back your living expenses and buy yourself some time.
Now, tell me about the loneliness of trading. A lot of people feel lonely trading, like they don't meet any traders in their city or something. Do you feel like that's an issue with you? Or I know you have a bunch of connections with your YouTube channel now, but do you feel like that's been an issue before for you, and how did you kind of fix that?
Yeah, trading can be quite lonely. I think we have all, or many people have experienced it during COVID times as well. Before COVID, everybody would like to work from home and be independent and manage your own time. And then I think a lot of people realize that this is actually quite hard. Once you don't have a boss to tell you what to do and when to do it, then you have to be responsible for your own stuff, take ownership of your day, set your priorities, manage your workload. And as you probably know, we are good at finding excuses for why we shouldn't do what we know we should be doing. Right. So work doesn't get done. And I think that can be a problem. If you're not a person who is self-motivated, then you're going to struggle with that. I've seen a lot of people who get into trading because they thought they wanted to have this lifestyle, but eventually moved back or moved back part-time to have a job in the social contexts. But it can help to have a group of like-minded people. It can also be a problem when you see that you are in a group with a lot of new traders or inexperienced traders. Then you have to be careful what information gets spread around. What do you take that information into account when making trading decisions? That can also be an issue. So yeah, it's not for all. But if you have seen that during home office times you can really work nicely, even if nobody's looking over your shoulder, then yeah, maybe that's for you.
Interesting. And there's also like the tough times of trading. Sometimes you go through a drawdown, then you need some kind of motivation that's not going to come from you, but from someone else, from outside, from other traders. I think that's good to know traders to do that. So definitely.
I also think it's very helpful that you need to have a balanced life. The best traders that I found, or even people who run their own businesses, they have a balanced life. They don't, and that's what I did in the beginning. I only had my trading. I was in university, but I really focused all my energy and time really into trading, and I think that's where I saw a lot of problems, and that's why I needed a change then as well. Because then a bad trading day is not just a bad trading day, but suddenly many traders derive their self-worth from their trading results.
Yeah.
And if you don't have the balance, then that can be an issue once you slip into that. What I found is really helpful to have hobbies and other things that you do besides trading, so that you can see, okay, I'm getting better at stuff. It's not only trading. I have other things that I'm good at, other things that I enjoy. And then if trading doesn't work out right now, or you have some hard times, then it's not the end of the world for you.
This is coming from someone who works, how many hours a day? You work like 2 hours a day or something, no?
Yeah, nowadays it was very different in the beginning. So I worked a lot. If you ask my wife, for the first 10 years, I was working 15, 16 hours every day. But yeah, you get to a point where you can approach things differently. And I moved to Asia, where the living expenses are very, very different from Germany.
And this is something I see with traders sometimes too, like people who make it like to trade profitably and they make a good living with trading, they kind of lose the drive to improve and get better. They lose the drive to like do more back tests. They lose the drive to improve the process. And they kind of stay stuck in like that average kind of place in trading. And then they don't really evolve, which means over time they kind of decrease in skills. How do you kind of avoid that? How do you keep staying like on top of your game in trading long term?
We did this podcast with, maybe you know them, Stephen Goldstein from Alpha Mind or something like that.
I've heard of it.
Yeah, and we talked about curiosity. We also talked to Dr. Steenbarger about it, and he said that the best traders they work with are the ones that are always curious. So I think that's a lot value into it. And what I have been doing for many years is that I always try to learn from other people. I buy courses, I go to seminars. Me and Moritz, we fly around to attend workshops, not host them, but attend them. And I think that's how you still always stay interested. You find new inspiration, you can listen to podcasts. And I think if you always try something new, then you can reignite the fire. And I often get to this place, as I said, where it gets boring to trade only one strategy. So naturally for me, I'm always looking for something new, backtesting ideas. I read books about trading, see what the other traders are doing, what can I integrate it. But it also goes in phases. I'm not doing this every day or every week. There may be a period where I'm not doing anything at all about that for 3 to 6 months. But then there comes this need where I feel there's a time for a change. And that's then where I go to the backtesting or revisit some podcasts, buy a course or something like that.
We got to talk about how you review your performance. So you founded, of course, EdgeWonk, which is a very popular trading journal platform. That's now online, so that's pretty amazing, where you can access it online. So have your journal hosted like on a website, which is pretty cool. How do you review your performance? Like how often, what's your process, and what do you look at when you go back to review your trades and your overall performance in the market?
So I do different reviews depending on, is it a weekly review? Then I will just look at what was my last week, what were the trades that I took, and what I specifically look at is my process. Do I see mistakes or errors in my trading? Do I see flaws that I keep repeating? And that's the first big red flag. So I focus a lot on the execution, how well I'm executing my trades. But then every 3 to 6 months, depending on the sample size, I will make a bigger, broader review where I dig into my strategy. I look for, okay, Is there a need to adjust my stop? Is there a need to adjust my target? Is my trade management still working? Are setups underperforming? Is there a way that I can squeeze out more? Am I underperforming maybe? So what is the problem? And it really depends. Is it a long-term review? Every 3 to 6 months, usually I do that to look for is there something to improve. But on a week-to-week basis, I just want to make sure that I execute my trades as optimally as possible. In H1, you can rate every trade based on your execution. Did you respect your rules, yes or no? And you can see quite a bit from that. And you can break those streaks where you get off the rails, hopefully early on.
So let's say you spot a mistake in your trading, that you've taken your profits wrong on a trade or something in a given week. How do you fix it? Is it just like telling you, I'm not going to do this again? Or how do you kind of fix that mistake? Do you make a plan to fix it? Or how do you make sure you don't make it again?
So in H1, you can track your trade management actually, which is helpful. You see, okay, did you mismanage your trade? Which means took the loss too late, maybe took the profit too early, you didn't wait for the target to hit, and this would have been the right way. And once I see that there is an issue, what I do is I write it down. I have always next to my trading desk, there's a little bit of a notepad, a physical one, and I write down what is my focus for that week. So I see it always in front of me, and I found that this works the best for me. I don't like to keep it on a computer. I like to keep it wherever I can see it. I don't want to pull out an app to find what I made, what I remarked. So I always have it in front of me, and every week I have like a focus point. What is my focus this week? And I found that this makes it less likely that I screw up. It's not 100%, but it's good if you bring it to your awareness and keep it in the forefront.
Yeah, it's a very good habit. The first thing, like writing it down on paper, is a good thing, of course, because then you don't have to, like, you kind of remember it better, of course. And having it in front of you is good because, like, you don't have to open an app, like you said. It's too easy to skip the app and not open it for a day or something. But having it at the computer in front of you is a good thing, of course. What would you tell people who, let's say, use a journal and then they are losing in trading, but they want to turn their performance around? They want to find out what works, what doesn't work. How did they go about this in either H1 or any kind of journal that they have?
So the first step why traders lose in the beginning is often they either have no process or they're having a process but they don't follow the process. So you have to make sure that the most important thing in the beginning is always work on your execution and try to make less mistakes. And you have to start obviously then at a place where you know what your trades are based on. So you write down your rules for your trades. And you write down, okay, what does it take for me in entry? You can make like a checklist. And then you can just go through every trade and compare to the checklist. Did the trade have all the points there or not? And then once you see that there's a deviation, then you can work on that. And I've seen that this is where you get the most bang for your buck. You see, or you work on breaking your rules less. And then you can have more consistency. You eliminate a lot of the noise in your trading. And that is going to bring you to a place where you don't have those really big outliers anymore. A lot of traders, when I see their journals, they have those crazy account balances. Their equity graphs go completely out of control, up and down, because they don't have risk management. They break their rules. And that's the first thing you need to fix. Make sure that you eliminate the noise, eliminate the big fluctuations. And that will bring you to a place where trading is not so emotional anymore. You're not always sweating. It's not always all on the line. And once you get to that place where you remove that noise, then you can work on the other stuff that's a little bit more advanced. But in the beginning, really make sure you have consistency, eliminate the noise, and try to break as few of your trading rules as possible.
A lot of new traders think that because they make money on this trade that they traded right and they are good traders.
That's going to bite you eventually. It's always going to come back. People break their rules, get lucky, make a winning trade, and they think they figured it out. They believe, okay, I don't need rules, I have my gut feeling. And eventually this is always going to come back. You read biographies like the one from Jesse Livermore. You will see he went broke many times, he made fortunes many times. But this is probably not a lifestyle that many traders would like to have. You want to get to a place where you make constant money, months after months, without those crazy fluctuations. You have to make sure that, you really get to a place where you analyze your trades, not only on the outcome, but also on did I respect my rules, yes or no. In H1, we made it super clear. You have this little red or green bar that comes up next to each trade, and it shows you, did you break your rules? Then you have a red bar. Did you respect your rules? You have a green bar. And you can see right away for the week, for the day, how well did you trade on that day. And you will see the correlation after a few weeks. The better you make your trading decisions, the better usually your performance will be.
So you mentioned in the beginning of the interview that you started to learn to trade during the dot-com bubble. Now I think we're seeing a similar thing now these days with cryptos. Like it's kind of like a bubble where it's like going up really fast and like now it's kind of dying out a little bit. How would you recommend people to switch back? Like let's say they've been into cryptos a lot, they made a lot of money in the past. How would you recommend them switch to work on things to become good at trading, but go past this like crypto bubble?
I guess a lot of traders who are in crypto or were in crypto are going to transition now to something else, or even the stonks guys. It's very important that you learn. I think what a lot of people realize that is that risk management is important when trading cryptos, and hopefully you're going to use that going forward. So I think this can be a good place if you have been starting during the crypto bull, you maybe got hurt. Maybe it's not the worst place to be in, because a lot of traders who made money probably then going to apply that to the next phase and or apply it now where it doesn't work anymore the same way, and they will get burned. So if you're really serious about trading, you have to, I think, really start and approach it seriously, step by step. You have to understand it is really like getting a degree, you study for something, you start a new job, and it just takes time to learn all the different skills. Like whatever you start new, it's always going to take time to develop it. But you have to make sure that you follow a serious approach. You get rid of or get away from those get rich quick promises, those crazy risk management principles or practices, and you just try to focus on building your account. Slowly build a good track record over time. That's the only way.
And even if you fail, it's also a lot of good experience you can use for the future. It's also a lot of things you might fail at for the first time that you can learn better the next time.
Yeah, if you learn something from it, then it can definitely be important. Many people say that losses are good because they teach you something, but you really have to make sure that you actually learn something from it.
Learn from them, yeah.
Otherwise, you're just wasting your time and your money that you could spend much better otherwise.
It's tough to go back on losses and like see what you did wrong or see what you can learn from it. It's tough and it's annoying, but it's definitely a good exercise to do, a good thing to look at for sure.
Yeah, and that's what I see the most is when you have the losing period, the losing streak, that's where people stop journaling, but that's really the time where you have to keep journaling. That's where you find out or learn the most about yourself, maybe, why you keep breaking the rules, why you keep doing that, what's wrong with your mindset, why are you doing the things that you're doing. And if you can find that really out, you get to learn yourself. It's not only going to help you in your trading, but maybe you realize, okay, I'm impulsive in my trading, and then you see, okay, that's a pattern that is also applicable to other areas in my life. And then trading can become this vehicle to allow you to work on yourself.
Actually, for me, in the beginning was the opposite. I would stop journaling like when I had a good run, when I had like like really good trade, like a good period. That's when I would stop journaling. Would say, oh, I don't need to journal anymore. It's like I'm good now. I'm a good trader, and I learned to over time like not do that anymore, because like I can get value from journaling when I'm in a good period or in a bad period, the same thing. But it's definitely you gotta be aware of.
Yeah, true. If you are overheating, you are having a good run, then you believe you have figured it out, that you don't need this anymore, but it's gonna come back.
Exactly. Good point. So where can people find you if they want to connect with you or reach out after the interview? Where can they see your work, learn from your videos, and all that stuff?
I guess the most active we are these days on YouTube, so it's just youtube.com/Tradeciety. That's where you can find every week something new from me.
Awesome. Yeah, you do publish a lot of videos there. You have also a big library of videos in the past people can search through, so that's a good thing. If they don't learn a specific topic, they can just search on your channel for these things. That's awesome. I also want to point out Edgewonk. Edgewonk is a journal that you have for traders. We'll leave that link in the description below for people to check out. And you can just search that right there. So a lot of good lessons there, of course. A good way to look at trading. I know a lot of journals are like too complicated or like too tough to use. And this one you can just like either put your trades manually in it or import them automatically, which is a good thing, of course. So definitely a lot of value there for people to look at, for sure.
Thank you. Yeah, and in Edgewonk, there's a free course that comes with it. So we take you through 15 videos, I think, step by step through the journal to help you understand, okay, what do you need to put in order to get something meaningful out, and take you by the hand. Because journaling, in the end, I understand it's not the most pleasant thing that you can think about when you're spending your time, but it is an important part, and we hope to make it as easy and as fun as possible.
That's awesome. That's very good. Rolf, I really appreciate your time and the advice you gave to the listeners here. I know they will like it for sure. You guys can give it a like to the video if you like it today. That would be awesome, of course. And check out the links below to connect with Rolf. And we'll catch you back here in the next video pretty soon.